Hi there, I'm Brian Christopher, and this is Smart Profits Daily. Smart Profits Daily videos are the only free source of information about investing on YouTube that offer insights from the investing luminaries Ian King and Mike Carr, and the soon-to-be luminary Steve Fernandez. In my opinion, that makes us the best. If you agree, or even if you don't, please click on the subscribe button. Your subscription helps us reach more people. Leave a comment down below. Just do something. Life's too short not to. Thank you in advance. And here's another question for you. Why do we do the things we do to ourselves? Why do we have to make things so complicated? I get questions all the time from people who want a good deal in the market. And it's a great question. In investing, I like to keep it simple. Why complicate something that doesn't have to be complicated? For example, what does the future hold? I'm not looking for a detailed answer. Just stop and say the first things that come to your mind. Of course, you could say death and taxes. If you did, I'd suggest buying a publicly traded funeral home and a tax preparer. The former is elusive, but if you're talking taxes, you've got H&R Block, ticker HRB, and Intuit, ticker INTU, the maker of TurboTax. These are two simple ideas. H&R Block is trending higher and pays a solid 4.5% dividend yield. You can't get that from your bank or from a treasury bond. And all Intuit does is go up. Again, don't make this more complicated than necessary. But death and taxes are pretty morbid topics. What else does the future hold? You don't have to be a computer programmer to know it includes tech, the Internet of Things, fintech, cryptocurrencies, big data, 5G, artificial intelligence, driverless cars, etc. If you want to learn more about any of these, the answer is also simple. Check out Ian King's Strategic Fortunes newsletter. You can see a link to it below my picture. I'm telling you, just do it. So, finally, in the search to keep things simple, I strongly encourage you to pay less for something than it's worth. If the market is willing to charge you $15 for a stock that you know is worth $20, strongly consider it. For example, take a look at these numbers. This stock's net asset value, or NAV, was $9.28 per share at the end of the year. The S&P 500 was up more than 6% in the first quarter, and it's up another 5% since then. It's logical to believe that this stock's NAV is now greater than $9.28 per share. That's not a stretch. It's a simple conclusion, but I'll bet it's correct. Can you guess what it's trading for? During intraday trading today, March 6th, 180 Degree Capital, ticker TURN, is trading for $7.23. If I assume its NAV is still $9.28, that's a more than $2 discount, and I'll bet it's higher. You see, on April 5th, 180 Degree announced the public portion of its portfolio had risen 28% since the end of 2020. The public portion of its portfolio had grown by $1.60 per share. By that, I mean the stocks that you can buy on a public exchange and the cash the company holds. We don't know exactly about the private portion of the portfolio or how much its corporate expenses were, not until the company reports. That will be any day now. I'm just saying, keep it simple. 180 Degree Capital's net asset value is likely greater than it was at the end of the year. It should be more than $10. It's trading for $7.23. Investing can be complicated if you let it be. This multi-dollar discount for 180 Degree Capital makes sense to me. It means I can buy shares for much less than they're worth. You can too. Thank you for watching, everyone.